Today's video here is going to blow your mind away and make you rethink about everything you've known so far about any type of trading strategy you have ever used. Yes, exactly. Trade Forex here, and this is going to be the continuation of my last uploaded video on the channel that, by the way, have received a massive good feedbacks and positive reactions from you all. Actually, it is ranking at the top #1 video on my channel right now, and today we are going to do the continuation by me breaking down some trades that I have taken on USD card over the last couple of weeks. I will be showing you the type of setup you could have taken if you were trading liquidity or structure, and why you cannot always have both on your favor. If one thing that I can say is that most of the time these two concepts will clash, and I will help you through this video to understand the importance of which one you should be using when and why. But before you get to it, as always, let's roll the intro with disclaimer, and I'll see you in a few seconds. Hello guys, back again, and I wanted to say that this video is for you all, and if you haven't watched the previous video, I highly suggest you to watch that. This is the video, that's the link on the description, because you need to, if you want to understand the continuation of the video, which is this one obviously in depth, then it will be good for you to watch that. If you haven't watched that, if you don't want to even watch that, then it's absolutely fine, because eventually I will break down the pairs and the trades so you can still learn without watching that, but it will be ideal for you to watch that. All right, now I made this video for you all, and particularly this is dedicated for this brother in here who has kindly requested me to make the trade breakdown on my comment section below. So if you're watching this video, brother, I hope you enjoy the trade breakdown, and this being said, let's get started. Now, before I jump to the technicals, I want to quickly recap what I was mentioning about structure and liquidity. One thing that many people unfortunately fail to understand, which I did initially when I started doing, is that every type of strategy you're learning, again, which is can be SMC, can be ICT, can be supply and demand, and obviously liquidity, you cannot expect that every time that you're learning this strategy, or as I said, also liquidity, that at any given time on the chart or any moment in the day, or any point where you're taking a trade, you can see the connection, the links between these 3-4 concept, whatever concept you're using, right? And yes, you can use liquidity with structure, you can use structure with liquidity, you can use supply, demand with resistance, support, whatsoever. But you have to understand that most of the time, and this is something that I always say, is that when you're trading liquidity and mostly structure, most of the time you will have scenarios where they will clash to each other, right? So you see liquidity telling you a different narrative than what the structure is telling you, and vice versa. And this is the point where a lot of traders, they start losing focus, they start losing confidence, they start losing, all the way that they're trading and learning. And honestly, it's exactly the same thing that happened to me. Okay, so now on this trade breakdown on USD card, I want to show you the differences of what I'm talking right now. Okay, so let's go to this chart and let me start breaking this down and how we're gonna start that. Okay, so if you have watched my previous videos or other videos as well, you know that I always say that the most important thing that you have to do before you even take a trade is starting with the higher time frame narrative. Where exactly is it we go? We go from 4 hour, anything from 4 hour all the way to daily, weekly, and if needed, even monthly, which is something that I rarely touch, but it's always good to have a look on what's going on in a higher time frame. Why is that? Is because, remember this, the most important things that you have to be aware of is not what is happening here on your right, but is always what's going on the left. Always look on the left. The left is what is leading us towards our success, like for real. Okay, and trust me, it took me so hard time for me to understand that, because I used to be the guy that was jumping on 5-minute M1 or whatsoever, and I'm like, oh, I'm doing this, I see the trade, I'm taking it because there's a trade. No, you have to always see what's going on your left in order for you to understand what's happening when and what you can expect in order for the price to do when it comes to go towards certain direction. All right, so now if we go to daily, what we can see in USD card is the following, that we have, okay, I'm starting from daily. All right, so we have currently, this is the current price action. This is this zone over here. We can clearly see that price has reached what? An important supply zone to the left, which is daily, so higher time frame, which is very important. Why it is important is because if you can see the order flow, you can see that this is the range right, that is currently from here to all the way down here, right, is currently holding, right, the whole structure to the downside. So price has broken over here in daily. So you can see price has broken over here. Then this is the leg, and this is the place where price has reached now, which is an extreme supply zone in a higher time frame. Therefore, you can already understand that if this is a daily high time frame and you're taking a trade in 1 hour, 15 minutes, somewhere around here, you cannot expect price to go and make a higher high. Why? Because before price even makes a higher high, right, it has to break this on daily, which is the one that's currently holding the whole range. You see where I'm going with this? So now that I know this piece of information, right, also, obviously, you have to zoom it out because you have to then ask yourself again the same question on a higher time frame. Where exactly this is going to go? Well, you can see that this one is retracing the retracement of this big move to the downside, right? But you don't need to know this. I mean, yeah, obviously you can see this, but it's not compulsory for you to be aware of it because these are like price action from 2-3 years ago, right? So what you need to know is just what's going on in big picture and who is in control right now within certain type of higher time frame range. In this case, it's daily, and we have this range from here to here. Okay, so this is very important. That is already telling me that yes, if I take any buy over here somewhere, I have to be very, very cautious because taking a buy from here, here, or here is not the same thing of taking a buy from here, or from here, right? Why? Because the road for my success, the road towards my TP is extremely, extremely higher over here compared to over here, right? So I hope you guys follow me with that. Beautiful. Now, what actually happened in this case is that if I go to 4 hour, right, I can clearly see that as soon as price came here and has taken all this liquidity, because you can see a lot of it equals high over here, right, price broke to the downside. Therefore, if you're trading structure or supply or demand, you know now what? That this high has taken a lot of liquidity to the left, has broken to the downside, and therefore now you have an important supply zone, which is this one, that has not been mitigated. Why? Because price just took the liquidity and ran away all the way to the downside. And here is why I want you to guys pay attention now, because now I'm going to be starting showing you from a liquidity and also from a structure perspective what exactly is we are looking for and we need to be aware of. Okay, so first thing first, let's start with liquidity. With liquidity, we can see that this high that has broken, so we already know the entire time frame we're in a bearish leg, right? I mean, there's no doubt on it. Okay, so actually let me clear this. All right, so you guys already know that. Okay, so this is the leg where we are right now. Okay, and now what's going on? We had a break of structure in 4 hour, right? And then what is actually happening is that structure wise, I know I'm bearish. Therefore, anything I'll be just looking for sell. However, people that trade liquidity, for them, this high is important. Why? Because this is the monthly high of September and this is the monthly low of September, right? So if you are somewhere around here in the mid side of October, you know that if you're trading liquidity, there are two ways where price can go. One is going and raiding this low, okay? And the other one is going to the upside. So therefore, that would be, if that were somewhere around here and they see bullishness, that will be definitely targeting all the above there to take this liquidity out. While me, if I trade liquidity, if I trade structure and supply and demand, I will be looking for a sell from here. But of course, I'm not going to leave a pending order because it's a 4 hour, right? So anything, I'll go to, 1 hour, 15 minutes and see what is actually going to happen when price reach that level. And as you guys can clearly see, okay, this is pretty obvious. Like, look at this. Price comes here and the order flow just keeps going higher till you reach this level over here. So now the question is, what you should be asking to yourself is that, okay, price is there, right? If I'm trading structure, if I'm trading supply and demand, should I sell? Can I sell? Is the narrative still the same? Well, no. Why? Because now that this high has been taken out, which was the one that was holding all the price all the way down here, right? It means that they might have switched the bias. So everybody right now here will be focusing on what? Oh, I'm going buy. Why? Because we turn it in bullish, right? We're going higher because price broke an important structure to the upside, didn't follow through when, this one broke to the downside, so it turned it bearish, so we starting going higher and higher and higher. But remember the exercise we did at the beginning, which was going to the higher time frame. What we know from a higher time frame, that this is our range, okay? This is our bearish range. Therefore, just because this has been broken, it doesn't mean that we're going higher forever. You see how important it is to understand what's going on to the left? So I know inside myself that I'm not going anywhere for a buy, potential crazy buys. Obviously, I'm talking about swing trades till this high over here is broken. Apart from that, I'm gonna definitely looking for sell, right? So what happens here, and this is where we're going next, is that now, obviously, if people that trade supply and demand and people that trade, structure, and they will have taken us losses, people that trade liquidity will be like, oh, your entry is my stop loss, your stop loss, whatever is my entry, your stop loss is my target, blah, 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 blah. Why? Because they target above that. So now my question to you is this: what would you do if you were to face this situation, right? What would you do if you knew that from here you can go for a sell, but also you knew that that's the liquidity target? What would you do? And here is where a lot of people, they get lost. And this is what I want you guys to understand, is that trading is all about probability, right? If you're a trader or you're learning to trade, you know that there is no certain things in trading. So what that doesn't mean is that if you have a strategy, whatever it is, all right, the likelihood of that strategy to playing out over certain type of scenarios on certain situation is all based on probability. There's no certainty. So why I'm telling you this is because if you understand how structure works, then you trade only with structure. If you understand how liquidity works, then you have to trade only with liquidity. Why? Because if you try to put them together, which you can do, and I'll show you in a bit shortly, right? You have to be very, very still selective to know when exactly you should be combining structure with liquidity. So what do I mean? Don't worry, I know it seems a bit complex, but I'm gonna be simplifying everything in a bit. Okay. So currently, if I'm trading structure, which is exactly what I do, I say that I will be looking for a sell. But guess what? I don't take any sell because there is nothing that is confirming me that there is a sell over here till we reach an important zone over here, right? So what happened here is that price goes low, high, and then we have a break of structure. And guess what? I have actually taken a sell and I've taken a loss. Why have I taken a loss? Because as you can see, this zone here, this is where I was exactly looking for. I refined, I left a pending order. I would have gone for, definitely for a stop over here, right? And then what happened is that price broke to the downside and then bam, that's a stop loss. Why? Now you might be wondering and asking, okay, one second. You just say that you're not looking for sell because price has violated this level, so we should be going bullish. So how come now you're going for a sell? Well, the only reason why I'm going for a sell, and that's the most beautiful thing about structure and the higher time frame, is that one, I know that to the left, we are still bearish, right? Why? Because we are inside the bigger range that I've shared previously with you guys, right? Secondly, another thing that I know, structure-wise, is that price can only go up and down. So if this breaks to the downside, I can still take the trade because I'm entering on a retracement of an impulse that just went to the upside. You guys see how I'm putting the dot together now? Okay, cool. However, what is the difference between this sell and the sell that could have potentially taken from this zone? Which is literally the fact that if this was a scenario, I could have targeted all the way to the downside because of lower low and order flow and the structure way of market printing out the price from point A to point B. But in this one here, however, now that I know this has been violated, I have to be very cautious because yes, I'm taking a sell for a retracement. Yes, I'm taking a sell for a higher time frame because we're still bearish. However, what I know is that now demand is in control in medium time frame. Okay, so this is the medium time frame that I have to be aware of. Till this low is not broken, I cannot expect price to go all the way down there. You guys see how I'm putting the dots together, right? So that's the reason why I could have gone for a sell there. Or well, yeah, that's a sell with a stop loss, obviously, 100%, right? And that's the time, the same exact time where people that trade liquidity will follow with the structure as well. Why? Because I just said previously that when price takes away, one second, just let me clean this out. Okay, when price takes away this high over here, which is a September monthly high, now all the people that trade in liquidity, right, that will be shorting. And now you can see this is one of those moments where structure and liquidity plays out together because high has been taken, low has been broken, right? And whether you trade supply, demand, or structure or liquidity, you will have gone for a sell, and it just didn't play out. Okay, you can see that didn't play out. So even people that trade liquidity, or they feel like they know everything whatsoever, it doesn't matter. It's stop loss for everyone. But then you can see here, and that's why I'm going the full breakdown of the USD card, is that price went higher. Okay, so I managed to take 2 trades. Okay, those are the entry area where I've taken the trade. This one, I've taken it with a pending order, which I'll be breaking it down shortly why. And this one here, I've taken it with more time for confirmation. It was very late in the morning. It was 5. I was literally editing my other video and stuff. I went to sleep late, so I couldn't wait till London open to take the trade. But eventually, I've still taken it, and then I went to sleep, and I wake up with the price hitting my TP. Okay, but now why I have taken this trade? Okay, and why it is important to understand that this trade had valid sense in order for me to see from point A to all the way point B. Where do you guys think that I have to go now in order for me to understand the potential that my trades can have? Well, guess what? Again, you go to higher time frame. So now if I go to 1 hour, let me see. If I zoom it to 1 hour, what I can clearly see, okay, let me go to 4 hour, I think that will be clear, is that within this leg from this high to this low, there is something very, very important, right? Let me show you, which is this zone over here. So if I go to, actually, let me remove over here, let me go to 1 hour so you can see that clearly, okay? So this is the high time frame leg that we have from here to all the way down there. And one thing that you can clearly see is over here. Check this out. If you are trading liquidity, again, this is an important supply zone, by the way. So that's definitely where I will be going next. But if you are trading liquidity, you can see that there is a hell amount of liquidity over here, right? So look at this. So there is a build up going over here. Then let me remove this one. Sorry, 1 second. Let me remove this one. All right, perfect. Then price takes the liquidity out and then boom, runs all the way down here, right? So now what happened is that when I saw that the other high time frame to the right hand side didn't play out, okay, it was a false break of structure to the downside, and I saw price still showed me the intention of going higher. Then I came here and I started studying the situation. I was like, okay, what exactly is going on? First and foremost, I trade supply and demand in combination structure. I knew that this supply was the next target to go for, and this was the most important supply within the whole zone. Why? Let me show you why. Because you can see that at one point price reached here, and then it gave a reaction all the way to the downside, right? That means the seller was trying to take control over here. However, this wasn't strong enough because price didn't go far. Then buyer took control again, and then they tried to put the price down. Look at the way these fat big candles to the upside were pushing. Look at this, pushing to the upside, pushing to the upside, pushing to the upside. However, this was the step, this was the supply, right, where price started leaving all the way down here. So now you can see that the real strength in the market entered exactly right from this point to all the way down here. Okay, you see, because this is the exact point where price literally left and it just started going down and down and down, right? On the top of that, if you studied SMC and all of that, you can see that this is the point, apart from being the important supply, that has also taken out liquidity. And there is what can you see that's missing here? Is a mitigation, okay? Price never came back to mitigate this top hunt to the upside. So therefore, I know that if I'm taking a buy to the right-hand side, this potentially is a nice target for me to go. So what do I do is that I mark up my supply zone. So this is simpler supply zone that I'm looking at right now, okay? I didn't take all this liquidity whatsoever in continuation because obviously as a confluence, you can do that. But my point of view is like, okay, I see that this is the supply from where all the order has been released to take price all the way down there, right? So then what I did is that I needed to understand what exactly was going on, and I think I've taken probably here 50% of the zone. So that would have been a very, very nice zone. Okay, 50%. You can already see here in a smaller time frame. Like, you know, when you're experienced and you spend so much time on the chart, you can literally see some, like, through the candles as well. You don't have to even play with the time frame. Look at this. You see this wick to the upside? Exactly. This is a stop hunt. And guess what? This stop hunt here, right? Lack of mitigation. There's no mitigation. There's nothing coming back later on. So I know that within my supply zone, if I were to refine just by this without going a smaller time frame, I know that this could be a potential nice target, right? So that's where I would have taken my trade for a buy all the way from the right hand side, right? So let's go and see what happened next. Bam, check this out. You see? Have you seen that? Look, exactly, price came exactly on that week that I just shared with you guys. So you can see that when I've taken the buy here, obviously I had my whole markup on the chart and everything. I knew that the likelihood of price reaching that level is extremely high, right? So what happened is that I left a pending order, and now we're going to go inside the trade breakdown in depth so you guys can see my point of interest, my intentions, and why I've taken the trade the way I've taken, all right? So now what's going on here is that, first of all, when I had taken the losses over here, right, price broke to the upside, and then what I did, I refined actually my entry all the way down here. So I think it was somewhere, I was somewhere around here when I left the pending order, and then what happened during the evening, this one here, it came close to my entry point because you can see the refinement is here, but my entry was above there. And the reason why I did that is because there was no momentum at that time, so I didn't know if that was going to play out during morning, the very next day, or during the night, right? So I just left a pending order. Then what happened is that later on the day, I've seen this one. Don't ask me why. For whatever reason, it did not activate my pending order. I think probably due to the spread. Then when it broke to the upside, and I still had my pending order, I didn't want it to put my entry here because yes, order flow has changed. So therefore, having an entry here would have been valid. But then later you can see the way price started building liquidity, and that already itself was telling me that the likelihood of this getting taken out and coming back to my original POY is still high. So then before I went to sleep, I kept my zone marked over here. I take the trade over here because it was like as a 9.5 pips. Yeah, beautiful. And then I placed my stop loss all the way down to my yellow zone. And as you can clearly see, price came here several times in the morning, and then you went all the way up where? To the target over there. Yeah, I could have targeted all the way here, but I didn't need to do that because I just kept it safe with a nice 1 to 8, and that was more than okay for me to go. And that was the first trade. Now also here I want you guys to pay attention because it's the same thing that I've been keep repeating over and over again. Look at this. So here you can see there's ton of liquidity forming, right? Price takes out the liquidity, so whoever is trading liquidity, they will have taken this trade because they have seen liquidity got taken out, right? Is end of Asian session, and then guess what happened? Price actually goes to the upside. But then this is the same time where structure and liquidity can go along. Why? Because structure low made the high, right? We can see from here price comes to the extreme demand, so you could have taken the buy in smaller time frame. You see? But let's say someone can argue and say, oh, look at this, you have a breaker structure, bam, this is a false breaker structure, you hit a stop loss. Yes, it's true. If I were to take this trade differently, like instead of taking it like this, if I would have taken it, let's say from somewhere around here, the extreme, because I see a breaker structure, and then I would have left a pending order, that would have been a nice fat stop loss on my face. But guess what? Again, probability and statistic. I stick to my rules, I stick to my plan, and guess what happened next? Happens that if this was a fake breaker structure, I would have still waited over here. Then this is 10:50 in the morning, right? Bam, guess what? Again, breaker structure, and I would have done the same. I would have definitely taken this demand zone all the way here, putting my stop loss all the way down here, and bam, I would have taken the trade. You see? So don't get discouraged or don't lose hope if you see that whatever strategy you're using is not playing out. Because what you have to do is you have to believe in yourself, and you have to keep testing it over and over and over again, and then collecting data. And look at this. If this was a stop loss for me, that the very next trade could have been a 1 to 10, right? So all the way up here, that could have been a 1 to 10. So why you should be worried about it? Okay, I know, and it's important because when you use social media and you see other people trading similar to you, but then you see them doing something different and they take the trade where you hit a stop loss, that's a big frustration. You start losing hope on your way of operating on the market because you hit a stop loss while they're hitting a TP, and you're like, how is that even possible? So you want to learn that, which in this case liquidity, right, or whatever, and then you just lose the track because at one point you have so much information in your mind that you don't know anymore what to do, right? And then guess what? This was the most interesting one. So now when price came over here, right, price started doing something very interesting. Okay, how many times I told through my videos that whenever price reach an important POY, the very important thing you want to see is that a quick run away from that specific POY. But you can see the price came here, supply entering the market, but price was just ranging, right? So I remember I was still doing some editing for the channel. I was doing some other stuff and backtesting whatsoever. So that day was very late in the morning. When price was around here, I had 2 points of interest. Point interest one was this one, all right? And then I had, sorry, just let me remove this one. Okay, beautiful. And then I had a point interest 2, which was this one within this way, right? So then what happened is that when I saw price coming here and it was building up like it was consolidating and suddenly started, pushing price to the upside, I just left a pending order over here, right? So let me go to M1 because this is I've taken from M1, I think, right? Let me get in. And voila, here we go. So what we have here is that, check this out, price started going high, low, high, low, high, low, break to the upside, all right? I had a very important refined zone over here. That could have been a very, very nice trade, which unfortunately didn't get to it. And then what happened is that when the price started breaking to the upside again, I left a pending order, but this time the stop loss was down here because I think around, it was 5:30 in the morning. I almost went to sleep. So I was like, okay, you know what? I'm leaving it like this, and then let's see what happens then in the morning. And where was my target? My target this time was very different than this one. So you see in this one, when I've taken the trade, right, I said the target was somewhere around there. So I think the stop loss was a little large. It was 9.5 pips, okay? And the target was here because this time my intentions were to price to see all the way down here. That was connecting back to what actually happened to the left. However, on this one here, right, it was very risky because I didn't know what exactly price wanted to do, despite the fact that this has already mitigated the red line. So I didn't know if price could have gone all the way up there or even further. But one thing I knew is that if it had intention of going to the upside, it could have at least made a new higher high, which eventually did for a nice 1 to 13. You see guys how I'm putting things together? So don't just stick to only one thing. You have to put a lot of variables together, a lot of confluences together in order for you to come up with the conclusion of what exactly is it that you want to do or you want to take. And those are the things that has to be repetitive. Okay. Now I'm giving you a different point of view on this one, just to give you the logic and the understanding of how you can break it down better every trade that you're taking, right? This is exactly what happened, just trading structure. Okay. This is exactly what happened. So now, if you were trading still liquidity in this case, you might have waited for what? Probably, if this high wouldn't have played out, you might have waited for this other high to be taken out. Why? Because eventually, this high over here, that you can see this supply zone, is actually, despite of being the stop hunt for this build-up over here, is also equal highs, right? Kind of equal highs. So there's liquidity over here as well. So that might have waited for this equal high to be taken out, and then that would have taken the trade. Right? That could have been a scenario. So as you can see, based on the way you're seeing the concept, the way you're using it, you come up with very, very different things. However, at the end of the day, the very most important thing is that you stick only to one thing, the one that you feel most comfortable with. And I'm going to show you now some crazy breakdown just using structure. Nothing else, just using structure. Check this out. This is literally last week, right? Literally fresh from last week. So what actually is happening over here, if I go to 1 hour, okay, yeah, let's say to 1 hour. Just, it's simpler, right? So what we can clearly see is that price goes low, high. We have a new high. So if you would have gone for a buy pending order over here, that would have been a fat stop loss. Okay, that's fine. No problem. Price then breaks to the downside. Okay, now that we have a breakthrough to the downside, what do you guys think is going to happen? Again, same exactly as we tried here to take the retracement, is the same exactly what will have happened over here as well. Now, for example, here, you had a high, low, high, low, high. Then what happened? This is a stop loss, yes, because you probably would have shorted over here, but then price would have taken you out due to news. And then, and then guess what happened? Price again breaks to the downside and you got an entry because then price retraces over here, right? So now, let me show you. Okay, let me show you. If I go to 15 minutes, right? So I think, yeah, here you go. Look at this. This itself, you will have taken a trade over here. Beautiful. Again, structure. And then look at this. High, low, break to the downside. Another trade. Now, again, you went all the down. Now, this is something I want to show you. This is very important. Look at this. What happened here is that if you're trading liquidity, people that trade liquidity, that would have waited for inducement. That would have said, oh, look at this. All high, all low, you know. So what do? I wait for this low to be taken, and then when this low gets taken out, then I'm taking the trade, which is true. There's nothing wrong with it, okay? I'm not saying the people that trade liquidity is wrong. Absolutely not. I'm just giving you the different point of view. So here, liquidity, that would have waited to see price taking the liquidity, and most likely, after the liquidity will have been taken out, that will have taken the trade to target all the up here. But guess what? It didn't happen. But if you were to trade the structure, however, on the other side, oh boy, this was juicy. I couldn't take afford anything over here, right down here. But look at this. High, low, high, break to the upside, right? Bam. You got an entry over here. Again, low, high, break to the upside. Guess what? You got another entry from the extreme. I mean, you guys see what I'm doing over here, right? Then what happens? Price go to the upside. And then here is exactly why I've taken the very next trade. And now, okay, here you go. Now we're going to go into that. What happened is the price broke all the way to the upside. And again, the same things. We are bearish on a higher time frame. So I give priority to bearishness, right? So you can see prices dropping all the way down here. Then price breaks all the way to the upside. But then remember what I said before is that just because price in a higher time frame is bearish, you don't have to forget about the medium time frame. The medium time frame is this one. If I take the sell, I have to be cautious. I cannot expect price to go down till I don't see this low get broken, right? And that's exactly what I did. Yeah, so this was actually a very, very beautiful setup over here, right? So what happened is that price started making the order flow high, low, high, low, high, low. There was a beautiful trade here that I couldn't take, unfortunately. And then what happened around 2 o'clock to New York? Check this out. Let's go to M1. This was juicy. Like, this was literally one of the best setup that I've taken. And here we go. Check this out. High, low, build up. You can see liquidity. Price takes out the high and then it drops. And then don't you see it's the exact same thing that I've shared with you in a high time frame previously, where you literally had this scenario of build up. So you had liquidity. Just drawing out nicely. All right. And then what happened is that price takes it out, run away, and then this is the important supply compared to this one. Don't you see it's the same exact thing? So I could have taken like the 50% of this, I could have left a pending order, but I've just taken the whole range because it's just M1 targeting where now this time, all right, I can target to a lower low, right? Where I've targeted somewhere around here because I refined it for a nice 1 to 10. So are you guys following what I'm saying over here? Is that at the end of the day, it's very, very important that whatever you do, you always make sure that you respect other people's way of trading, okay? There's no such thing as that, oh, this strategy is better than the other one, this strategy is better. Everything works. Literally, everything that you use on your trading journey, everything works. The most important thing is that you have to feel comfortable and confident enough on trading that. Because I'm not here saying, oh, liquidity doesn't work. No, absolutely. That's the most important thing because that's how market moves. But in my case, personally, I love supply and demand and the theory behind, smart money concept whatsoever. And that's the one I'm most comfortable with. But if I were to use that, I could have taken this trade. I could have taken this trade. I could have taken one trade here, and eventually I've taken over here. And by the way, before anybody says anything, let me show you. Those 3 are the screenshot of the trade I've taken on my MP4. And that's it. Done. Then I've closed them in profit. And obviously, I did hit loss here. And I didn't hit any other loss over here. But I do trade other pairs. So I've taken losses on those pairs as well. But eventually, when I started trading with structure and liquidity, I remember I was so lost. Why I was so lost? Because I had scenarios like this where I had a monthly high, monthly low, but then this high was the structural low. So I was like, okay, what do I do now? Shall I sell? Shall I buy? And the same things for intraday. When people trade like the Asian session, right? So when you have the Asian session box and people be like, oh, I'm going for London Open, inducement, or low and high of inducement. People will be like, okay, what do I do? What if now the Asian box structure-wise is the high that made the low? What would you do? And this is where I was getting so confused that eventually I started messing around with my account. I started losing performance. My equity curve started going down because I was so insecure about what I was doing. But then eventually I realized that everything's probability. So all I got to do is just I either trade the liquidity, which is basically waiting for the inducement, and then inducement or whatever you want to call it, stop hunt, right? And then trade the trade, or just follow the flow. If this is the order flow, this is the structure, this is supply, I'm going with that, so I'm taking it. You see? And that's exactly what I did over here. So, I know it's been very intense. I know it's been very, very intense, but I truly hope you guys gain value and you guys been able to see the different point of views that I've been providing, differentiating the liquidity and the structure and understanding the importance of it. But it is very, very crucial that you grasp this, because if you don't grasp this, you're going to get so confused. You're going to have so many things on your mind, because unfortunately nowadays, one thing that you guys have to understand is that, 10 years ago, people were just trading patterns, right? Like harmonic pattern, support and resistance, whatsoever. There were a few concepts. So everybody using the same concept was way easier for you to trade, learn, and do things appropriately, right? But nowadays, there are so many concepts. You open YouTube, you see all of this information, and then you get confused. You just don't know anymore how to put the puzzle together. And you have to spend years and years of hard working, watching videos, and, having mental breakdown, like crazy thing the way I had to go through, unfortunately, right? Before you even get to understand what I'm just showing to you now on this video, or even the other videos I made on my channel so far. Okay, so I'm gonna let you go, guys, now. So I hope you enjoyed the video. I hope you understood. I hope you gained value from it. And if yes, just as always, subscribe, like the video, share. And also, if you guys want me to, because I was actually thinking to open a Telegram channel, right? So where we can all discuss about trades, where, people can exchange their own idea, their point of view, because I respect everybody. Even if you're trading support resistance, I don't mind. I will be more than happy to have a chat with you guys, to talk to you guys too, and all this kind of stuff. And obviously, I'm here to help you to learn all the concepts that I know so far. And obviously, I have my own strategy, my own mechanical approach that I use on the market, which is something that I keep it for myself. I'm not sure if one day I'll be, making it public or whatsoever. I have no idea right now. But one thing I know is that I can share a lot with you guys, because I have a lot of things that I can actually share, right? And if I can help, I'm more than happy to do so. So I was thinking to create a Telegram channel. If this is something that you guys want to see or have as well, let me know in the comment section below. Then I can create a group where anyone can join. It's completely free, absolutely. It's going to be for free. And yeah, let me know what you think. This being said, I leave you with that, guys, and I wish you all the best for the upcoming week. As always, any question, any query, just type it on the comment section below, and I'll see you to the next one.